Hello, friend. If you're cleaning up messy books, knowing how to read an income statement can give you an instant snapshot of just how much work you're walking into. Think of it as the big picture view. Do the numbers tell a story that makes sense? This video is also great for business owners who simply want to better understand their own income statements. So today, I'm going to show you different examples of income statements and how to spot red flags in each scenario. Perfect for cleanup jobs. By the end, you'll know exactly what to look for and how to make those numbers tell the right story. So I prepared 5 income statement examples, all from Craig's Design and Landscape Company, which is QuickBooks sample company. So here's the first one. The first area to focus on is income. Every business should have revenue accounts that make sense for their industry. Since this is a landscaping company, you'd expect to see accounts like plant and garden supply sales, landscape service income, and design consultation fees. Something clear and specific, and all of these make sense. But then there's sales of product income, and it shows 0. That raises a question. Is this an extra account that isn't really being used? Or should some of the sales sitting here actually belong in one of the other accounts? It sounds very similar to plant and garden supply sales, so maybe these 2 accounts could be combined. Here's another point. These accounts don't even have account numbers. That's a red flag. See, this one has one, 4110. When accounts lack numbers, it usually means they were added on the fly, which can make reporting and cleanup more complicated later. By the way, you should never see negative numbers in the income portion. That's almost always a mistake. It usually signals misclassification, a refund entered incorrectly, or an error in posting. But if you do see a random negative in the income portion, and it's clearly labeled as sales returns and allowances, or discounts, then that's completely legitimate. They're called contra revenue accounts. Just make sure it's being used consistently and correctly. So the troubleshooting takeaway here is income accounts should be specific, consistent, and meaningful to the client's business. That way, when Craig looks at his report, he immediately understands where the money is coming from without asking, what does this line even mean? Next, let's look at cost of goods sold, or COGS. For this business, the COGS should reflect direct costs of delivering landscaping services. So these right here are good examples. The first thing I always check is negative numbers. And just like in the income portion, you should never see negatives in the COGS portion. If gross profit is negative, that usually means services or products were priced incorrectly. A big red flag. Similarly, you should never see negatives in the expense columns, though it's possible to see negatives in net operating income or net income. That's not ideal, but it can happen occasionally. Looking at Craig's Landscaping, I notice a COGS account without an account number, so this is something we can clean up. We can also move the unnamed COGS into one of these proper accounts, giving us clean, organized reporting. The good news is there are no negative numbers here, so totals look correct. Moving down, I see employee benefit expense. That's normal to see here because it's part of the cost of running the business. Still, it's good to double check. If what's showing up is really money the business still owes but hasn't paid yet, then it doesn't belong on the income statement. In that case, it should show up on the balance sheet as a liability, something the business owes, until it's paid. So make sure it's not misclassified. Next, I see uncategorized expense. For Craig's Design and Landscaping, this could be anything from a small tool purchase to a one-off supply. And to be honest, I'm allergic to this account. Uncategorized expenses are a problem because they make reporting unclear and will raise questions for the tax preparer. So here's the solution. Investigate the uncategorized transaction to see what it actually was. Assign it to the correct account in QuickBooks, like supplies and materials, or meals, or whichever fits. If you're unsure what the expense was for, ask Craig or the office manager. They can clarify the purpose so it's recorded accurately. Other income. Anytime you see something here, you want to ask, where is this coming from? You see, miscellaneous income is another vague account. Could it be a gift card or an interest income from a business savings account? You could change this and create sub-accounts under other income so that your income statement is more transparent. Let me show you a different income statement. I see positive numbers in the income, COGS, and expenses sections, so that's good. Some accounts don't have account numbers. We can clean that up. Gain on sale and the depreciation and interest expenses are positive, so the formatting looks okay here. But notice that net income is negative. That simply means that even though sales are coming in, the expenses are larger than the income for this period. In other words, the business spent more than it earned. So by looking closely at the numbers, the business owner can gain valuable insights into what's driving the negative results and make the changes needed to bring the business back into the positive. Let's look at another one. Unapplied cash payment income. Okay, normally, customer payments should be applied directly against an invoice. If you see an unapplied cash payment, it usually means a payment was recorded but not matched to the right invoice. That makes income look off. We'd want to trace where it came from, apply it correctly, and make sure the books reflect the true revenue. Here's another income statement. This income account, currently labeled just sales, is too broad. We should give it a more specific name like installation revenue or something that clearly describes what it's for. It also needs an account number. And just like with uncategorized expenses, I'm also allergic to uncategorized income. Giving each income account a clear name helps anyone reading the income statement understand exactly where the money came from. No guessing required. Alternatively, some of the transactions in these two accounts might actually belong in other more specific income accounts, so we could relocate them there. Here are some red flags, negative numbers in expenses that should almost never happen. The only exception is a refund, for example, returning office supplies. Payroll-related items like workers' comp, health insurance, retirement contributions should almost always be positive because they are actual costs of running the business. So if these appear as negative amounts, it often means the transaction is misclassified. For example, if a payment hasn't been made, it might belong on the balance sheet as a liability, not the income statement. Speaking of payroll, the taxes other than income account caught my eye. It shows $3,235 and 17 cents. While salaries and wages are only $3,250. That's unusually high. This account is supposed to reflect only the employer's portion of payroll taxes, things like Social Security, Medicare, or unemployment taxes. When it's almost as high as total wages, it usually means something else might have been included by mistake. I take a closer look to see what's in this account and make sure it's classified correctly. Here's another account to look at, auto expenses. The total here seems high. Some of it may be routine costs like fuel or maintenance, which is fine as an expense, but larger costs like major repairs or vehicle upgrades might actually need to be recorded as fixed assets rather than expenses, depending on IRS rules. So it's always a good idea to double check with your client so everything is classified correctly and the income statement reflects the true operating costs. Before we dive into our last example, a quick note. I'm a QuickBooks Pro Advisor, so if you ever need help with QuickBooks Online, call, text, or email me and I can help. And if you're finding this video helpful, please subscribe and give it a like. Okay, now let's look at income statement number 5 and see what we can learn from it. I see negatives in income, COGS, and a bunch in expenses. Here's a quick list of why a small negative number in income is usually a mistake. Refunds or returns posted incorrectly. Data entry errors. Payments applied to the wrong account. Journal entries reversed or misposted. So this list helps you quickly flag it as something to investigate. A negative number in COGS usually means something was recorded or classified incorrectly. COGS should almost always be positive because it represents the cost of the products sold. Let's talk about this account. QuickBooks creates an inventory shrinkage account whenever you adjust inventory quantities. This is normal. The problem happens when products aren't linked to the correct cost of goods sold accounts. In that case, the costs show up in inventory shrinkage instead of the right COGS account. The fix is pretty straightforward. Go through your products and make sure each one is assigned to the correct COGS account. That way, the income statement will show the true cost of the products sold. I see a lot of payables here and are showing us negatives. 1, 2, 3, 4, 5, 6, 7. These are liabilities, guys. Liabilities belong on the balance sheet, not as expenses in the income statement, and they should have proper account numbers as well. Also, watch out for redundancy. Payroll tax expense and taxes other than income sound very similar. Make sure you know why both exist, okay? Depreciation looks good, positive and properly recorded, so we know the adjusting entries were correct. I notice an unrealized gain or loss. In a small business, these generally aren't posted on the income statement because they don't affect actual cash or business value. The rule of thumb is post only realized gains or losses. For Craig's Design and Landscaping, this means recording transactions as gain on sale under other income or loss on sale under other expenses. Using clear descriptive names makes the income statement much easier to understand. Each number should tell a clear story, where the money came from, where it went, and whether anything needs attention. When the books are organized this way, you can quickly spot errors, ask the right questions, and take action to improve the business's financial health. In the next video, I'll show you how to present an income statement to your client so it's not just accurate, but also polished, easy to understand, and visually appealing.